At the moment, the stock market is rising, which is definitely a shocking news as people around the globe are still suffering and unemployment rates are still high. Is the stock market about to crash again? In this video, we will discuss the concerns that experts have about the stock market. If you find value in this video, then click the like button and make sure you subscribe to my channel. The S&P 500 index hit an all-time high on 19 February 2020. Within just 15 trading days, the outbreak of pandemic caused a chaos and the US stock market dropped by more than 20%. This was the fastest stock market crash that occurred in the US, as it has outdone the great stock market crash of 1929, which took 30 days to drop by 20%. Not only United States, but stock markets around the globe have been affected by the stock market crash that occurred in March 2020. On 8th of June, the S&P 500 index recovered from the market crash and was all-time high again. But remember, the stock market is forward-looking. It doesn't reflect the current situation of the economy. So, will this lead to another market crash? Well, nobody can speculate what's exactly going to happen. But what we can do is see what's driving the market and what the risks are. Let's have a look at the factors that can lead to the next stock market crash. Number 1. Unemployment rates. The unemployment rate in 2008 crash was around 9.6%, but the upcoming recession of 2020 is even worse as the unemployment rates are closer to the Great Depression of 1929. As per the jobs report released in May, unemployment rate is about 13.3%, which is very high as compared to the unemployment rates of last year. A lot of states are opening up, which might lead to a decrease in unemployment rates. Maybe we can see a difference in the next month's report. It's important to track this rate and see how quickly it goes down, because if it doesn't, then this might affect the stock market in future. Factor number 2. Earnings report. The second reason is future earnings report. There is no problem with the quarter 2, as most people expected a very bad earnings report this quarter due to the shutdown of global economy. What are of major concern are the third and fourth quarter reports. That's when we get to know the companies who suffered badly and companies who are back to normal business. Hence, not many predictions can be made about the performance of companies in these quarters. The actual report will bring changes in the performance of the stock market. Number 3. Second wave of virus is another concern that would lead to a stock market crash in the future. There is a lot of uncertainty around the global pandemic, and as per the research, more time will be required to develop a vaccine. So we don't know what's going to happen. Maybe another outbreak. We can't really speculate on this. Stock markets have observed a high growth in last month due to optimism around the reopening of economies. This led to recovery of stocks and increase in their prices. However, experts went in depth by getting a reality check and found out that COVID-19 cases are increasing again in many countries. A second wave of pandemic could be just around the corner, which is a threat to population, economies, and stock market. Few experts say that the stocks which would be highly affected in this scenario are the travel, entertainment, and hotel stocks, which were overvalued due to the expectations of recovery of economies. Moving on to the next question, which is a really important one. How do you prepare for a stock market crash? Number 1. Be prepared to invest during the next dip. Many people become rich during market crash, so are you ready for it? The strategy is to wait for this moment and invest in stocks whose prices are dropping. It won't be the lowest you could get, but it will be much cheaper as compared to the normal price. Watch the stocks you wish to own and save money to invest. Only if you have set aside emergency funds to cover up your living expenses for the next 6 months. Number 2. Make sure the stocks you have invested in are of the best companies, the companies who have the potential to survive any crisis in the long run. With restaurants opening, cruises going on, and businesses getting back to normal routine, few people are living in false hopes, and a lot of investors are making mistakes by just looking at the surface. A few investors assume that the company is doing well as they are having same amount of customers like before and generating revenue, so hence their stock prices should be high. But this might not be true. What one should do instead is look at the financial statements and discover the actual outstanding debts. In these situations, when the businesses have been closed for more than 3 months, of course, they weren't generating any income. Hence, this means maybe they had to borrow money during economic crises at a high rate, and this would affect their future profitability, as whatever income they are earning now, it will be gone in paying debts. Therefore, look at the underlying issues like how they are managing their debts. Are they generating more revenue? The question is, are they worth holding on to?